All right, welcome to The Explainer. Today we are diving into something huge, a real seismic shift where crypto and traditional finance are about to collide in a big way. We're going to unpack how one single policy change could unleash a tidal wave of cash that completely redefines the market. So let's jump right in.
Take a look at that number, $12 trillion. That is a number so big it's almost impossible to wrap your head around. So where does it come from? Well, this is the massive pool of capital just sitting in the U.S. retirement market. We're talking 401ks, pension funds, the whole shebang. For years, this money has been totally walled off from digital assets. But, that wall, it's about to come crumbling down.
And that right there is the million-dollar, or I guess the $12 trillion question, isn't it? What actually happens when an absolute ocean of money like that is suddenly allowed to pour into a brand new market? The source material we're looking at today lays out a pretty fascinating and, frankly, immediate chain of events. Okay, so to really get what's going on, we have to start at the beginning. We need to look at the catalyst. Let's break down the one single event that kicked this whole entire thing off.
And here it is. The analysis we're digging into points to a very specific date, August 7th, 2025. An executive order was signed that essentially gave the green light for 401k retirement plans, yep, that whole $12 trillion market, to start investing in crypto. That single signature, that was the key that turned the lock.
Now, you got to understand, the crucial point here isn't just about the money. The analysis we're looking at argues that this is a huge, powerful signal of legitimacy. Think about it. An asset class once dismissed as speculative, as fringe, is now being welcomed into the very heart of mainstream, long-term investment portfolios. That is a complete game changer.
So as you can probably imagine, the market didn't exactly sit around and wait. The reaction to this potential flood of capital was, well, it was immediate and it was explosive.
Yeah, the impact was felt right away. What the data seems to suggest is that Bitcoin surged to a new high of $124,000, while Ethereum climbed right past 3,800. And this wasn't some slow burn, This was the market instantly recognizing just how massive this policy shift really was.
And get this, it wasn't just the big institutions getting ready. The source material also points to a massive surge in retail activity. We're talking platforms like eToro reporting double-digit growth, which shows that everyday investors also saw this as a major turning point and were jumping right into the market.
And this hunger for new opportunities went way beyond just the established coins. The data points to pre-sale tokens, like Remitix, for example, which reportedly raised nearly $20 million before its first official listing. This just shows that investors weren't only buying the big names, they were actively digging around for that next ground floor opportunity.
Okay, so with all this new capital flooding into the market, what type of opportunity were investors actually looking for? Our source material zeroes in on one specific project, GenaImpact, to really illustrate this shift.
Now, I want to be really clear here. We're simply unpacking the argument that's presented in the source document. It's making the case that a project like this one is uniquely suited for this new environment. So let's explore that logic, shall we?
So, the source breaks its argument down into 4 key attributes.
It points to an early-stage advantage, something called a purpose-driven narrative, a unique portfolio appeal, and, importantly, alignment with new regulations. Let's take a closer look at a couple of these, because they're pretty interesting. And here, we see a really fascinating contrast that the material we're looking at highlights. The argument is that the market is, it's growing up. Investors, and especially the folks managing retirement funds, are shifting their focus away from purely hype-driven tokens and more toward projects that have a purpose-driven narrative. Ones that are rooted in real-world utility and social impact. And this ties directly into what the source calls portfolio appeal. This quote from the document really sums it up perfectly. In a world where things like ESG and impact investing are becoming huge priorities for large funds, a project that can offer, and I'm quoting here, returns with responsibility, that has a distinct advantage. It's a narrative that fits perfectly inside a modern, diversified retirement portfolio. All right, let's zoom out a bit from that specific case study and look at the broader conclusion from our source material. What is the big picture takeaway from this entire event?
This right here is the central thesis. While all the soaring prices are what grabs the headlines, the source concludes that the real story is something much deeper. It's a fundamental shift toward legitimacy and a growing demand for actual, real-world utility.
So, to kind of sum it all up, the analysis identifies three key shifts. First, crypto is no longer just a fringe asset. It's becoming a standard part of a portfolio. Second, with that mainstream adoption comes a bigger appetite for authentic, early-stage projects. And finally, there's this growing search for projects that offer genuine, real-world utility beyond just speculation. This isn't just another boom, it's the whole market growing up.
And all of that leaves us with one final big question. We've just seen a major wall between traditional finance and crypto come tumbling down. So as these two worlds continue to merge, what is going to define the next ground zero opportunity? Definitely something to think about. Thanks for joining us on The Explainer.